I wanted to take a few moments this morning and go through one of the things that we spoke about yesterday, or I should say last week. Does everyone here remember the analysis we did last week on crude futures, when we spent an inordinate amount of time understanding what that pattern was going to bring based on the past iterations of this pattern that we had discovered? Anybody? So if you remember, we had specifically used the Orion predictive tool pattern to go back and look at all these instances where we had the collapse, this double top, and then the drive down. And we'd gone back, according to my notes here, here's 2011 was as far back as we had gone to find these patterns. And one of the things we'd uncovered, Dennis, was based on the components of the pattern that we were expecting crude to fall all the way to this 180% to 200% extension of this double top area up in here. Okay? And I wanted to just review with you the power of that analysis. Here we are days later. At the time, I want to say that we were somewhere in the 62, 63 region, like 61.30 at the time. Yeah, we were right here when we made that original assessment. And there's a YouTube video about it out there. I think we recorded it and put it up. And so this pattern that we'd uncovered, we had determined that if this pattern followed what we'd seen in 2011 and all these other iterations, again, I'm going to zip all the way back to that one here, that Dennis, we would see this thing kind of creeping all the way down to the 180 fib, where we would see a bounce back. So there was an opportunity for those of you that are swing traders or position holders to hold the pattern down on the short side and then purchase on arrival and reverse on the other side. So if we come back and look at what actually took place using the construction lines that we drew, I want you to look and see what's actually transpired. It's actually, I'm inspired by it, actually. What transpired inspired me, because it means that we're really onto something here, decoding the patterns of the banks and have a clear sense of what to look for. They say history repeats, but sometimes it rhymes, right? That's a pretty common quote that we've been using across the years. So now check it out. On the way down from the 61.30 area to the 180% fib, I got to change the font there, but how many points or ticks do you think that fell? $295. So if all we did was keep that short position rolling until that target, there was basically almost $3,000 per contract available. Now, we have this 180 to 200% buying range that we were looking at, plus the moving average. And so down in there from 58.33, look at the the revolution from selling to buying right here, up off of that. And you'll see that we're higher than we started, and there's over 300 ticks on that 180% reversal. And again, all of this information is based on something that's been happening since 7 years ago and beyond. So these patterns are extremely important. The predictive nature of the time patterns, they run through these sequences over and over again. This is a sequence, by the way, that you'll find on a 1-minute chart, on a 10-minute chart, on a 15-minute chart, on an hourly chart. So take some time at the end of these classes that we're doing here. Those of you that are customers that are listening to this now, and if anyone who's listening to it in the future, take the software that you have and go and look and hunt and see and learn these time-based patterns, because banks have been using them for going on a century, since when WD Gann first discovered the code that they were using to set these patterns up. You can go back and learn some of these signals. One of our customers, he's here this morning, Juan, has done a really good job. He's taken the library of patterns for himself. He can sort of see these things happening, red this, green that, red, and he knows to look for the next sequence of events. Okay, fails here, this one 80% chance it's going up. So it's real important. We'll keep our eyes on this pattern. I'm encouraged so far. We had the first reaction we were looking for. We had the second reaction we were looking for. Now the question is, will it climb up into this trend line over here by this blue line here? There's a time element to this pattern now that we have to just sit and watch and wait for. Will we find ourselves up into the 63s when we get how many more days into the future? Let's just count real quick. And we'll go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So almost 3 weeks from now, the expectation is that we'll be up into the 63 area, so $3 more above us, if those patterns continue. So we'll continue also to watch this pattern. One of the things that I want you to see is, as of yesterday, or as of this morning, there is a puncture of my red dot right here. This, the wick of this candle has broken above the center line of that red dot. And we specifically made a point of pointing out what happens when that generally occurs. When there's a puncture, it's an indication of a void, a vacuum of selling pressure where there should be selling pressure. And when we looked back over the course of the year in CL, you can get a sense of what happened every time there was a puncture of that dot. Okay. There's also, exactly, George, there's a pattern 4 to the very left of this Orion signal, meaning there was a lower low candle to the left of this dot. So for those of you that follow our patterns in the histogram guidebook, that's a beautiful pattern 4 in there. So there is an inversion right there, exactly. So George, there is 2 recent inversions. That's correct. So we're going to keep an eye on this pattern moving forward. But as of right now, there's about $5,000 in potential profit from the original call to the original bounce point to where the market went from there on that stop in reverse. So great job, everybody, helping find that pattern. And we'll continue to decode these timing patterns for the banks moving forward in other markets.